Oh, oh. What? Is that right? Ho! I don't know. Hold on. Hold it here. Hold it, hold it, hold it, hold it, hold it, hold it. Hey, that is right. What do you know? Hey! Okay. Yeah. It would appear that we're live. Yeah. Hey, Brandon, what's up? Yeah, buddy. Yeah, buddy. I know. Better late than never, right? Snow, good morning. Coffee's hot. I'm jealous. I'm jealous. Get some hot coffee after this. You know what I'm saying? We'll keep it brief so I can get my coffee. All right. So, how is everybody? Hope all is well. Yes. We missed the candle. I know. Yo, what's up? Navin, what's shaking? Yeah. All right, so let's talk about it. Let's figure out what's going on here. Let's pull up the old Coinbase. Oh, let's get out of here. That's incorrect. What's today anyway? What is today? 25? 25. Let's just go ahead and change that just so we feel like it's right. Even though it's not. But, you know, we're going to talk about it anyway. So it's fine. Couple minutes here or there, plus or minus. It's all good. This is the 4-hour chart. So, you know, we can clearly see the symmetrical triangle that's being played out right here. Let's go to the 24 and just check it out. Amazing. Thank you. Nice. All right. So, on our Coinbase chart, I know I gotta do something with this mic because it's just in my way. And by the way, I know you're all thinking about it. Don't worry. I got my mouse back. All right. So everything is status quo on the mouse. So it must have been another chart that we drew this out on. Guess we didn't quite draw it out on this one. No problem. We'll draw it out just like that. All right. Easy peasy. Let's get this out of here. Okay, so what we were looking at is the symmetrical triangle playing out because, you know, cautionary period, right, inside, and then long above, you know, if close above. And again, you know, we would roll down just to something else. 26 here. Snow's in the future. In the future. We're not there yet, but still having my Starbucks. Oh, man, you ain't got no D&D over there? Jeez. Adios mio. All right, so, yeah, so we're looking at here, right? We got rejected the day before. I was looking at the next move to be a test to the downside, so that was wrong. It was another test to the upside. So, hey, what do you know? But we were looking at, right, down, up, down, up, down, up. We expected a test to the downside. Didn't happen. We got another test to the upside. So, double rejection 2 days in a row. It's not great, but it's okay. The idea here is that you keep testing this same resistance. So, right now, you're verified, right? This is a solid trend, right? You got 1, 2, you got 3 touches. So it's a confirmed trend line. So with a confirmed trend line, now at least you can put a little bit of weight behind it. And again, down at the bottom, right? You got 1, we'll call that cluster 2, call this cluster 3, right? So 3 to the up, 3 to the down. So now it's make or break time. But, you know, like we talked about before, as far as symmetrical triangles are concerned, you want it between 50 and 75% of the pattern, right? So if this were to extend, you know, to like, let's say, where did we start the pattern? Let's say we started the pattern like right here, ballpark. Let's put this back over here. All right. Oh, not over there, over there. So if we said this, right, 50% would probably be like this candle, right? More or less. Like, what do you got? 1, 2, 3, 4, 5, 6. And then what do you got on the other side? 1, 2, 3, 4, 5, 6, 7. So you get 8, 9 would be on the apex, right? So right in this ballpark is the 50%. 75 is probably like right about here, which means we're losing steam, right? Even if we broke out here, now you expect less oomph. Where before you could have done something along this ballpark and got like a measured move, you know, something like that. And then you could say like, all right, yeah, if we break to the downside, you're looking at it like, that's way down there to the upside, you know, yada, yada, yada. You'd be able to do something like, you know, that, which then is pretty significant, right? That puts us at 98, which is pretty crazy. On the downside, though, it gets us all the way down to 6,000, which again is pretty crazy. But now you lose steam. So as you get closer and closer and closer to the apex after your 75% pattern, right, it just becomes less and less and less significant. But in any event, we can still use our trends, and these trends will, you know, play out further down the line, right? So we can still use this line. That may, oh man, thanks. Just got some fresh coffee delivered, everybody. What? Yeah, that's what I'm talking about. I think they're happy.
Yay.
Yeah, well, they should be happy. Are you guys happy? You should be happy. You should definitely be happy. Fresh coffee. That's good for everybody. All right. Anyway, these trends will more than likely come into play down the road, like especially like up in this ballpark here as resistance or support, and down here. So depending on whether we go up or down, these can tend to, you know, become a thing that like a repeatable thing. And I think we showed that a while back, but there was something back here, I think. That doesn't look like it's going to line up to much of anything. But there was whatever. There was a good good example that's I can't put my finger on it now, but it was great because we were looking back at it and we were like, holy crap, that's all the way, you know, from back there. But sure enough, it was like, you know, to the dollar resistance. So it was pretty incredible. And that's you know, that's TA. We like it. That's what we like about TA. Anyway, let's go back to this. So let's talk about the candle that we had. We opened at 8,001. We had a high 81.49. We had a low 79.41. So a pretty small range right there. Not a whole lot cooking. We closed it out at 80.63. So it was a positive candle. We got 62.11 out of it. 0.78%. So less than 1% on candle move. Still within our symmetrical triangle. Still, you know, posting, you know, an uptrend. So in any event, still on a swing fail, right? Still failing to get over 83.88 and being crushed by our current resistance trend line. All right. So again, this candle here does not have much room to disappoint. If it's going to go to the upside, we expect more resistance. Let's just call it up here. 81.37. So if you're looking at the chart later and you see it's like 81.50, well, guess what? We're over our, you know, pattern right here, which we haven't breached yet, right? We painted this one on wicks. We painted this one down starting on wicks, ended up closing on body. This kind of cut through a little bit, but it's okay. And then again, resting on the body over here. So no attempt has been made to push past here. So that would be very interesting on the upside, but doesn't leave a whole lot of room for that to happen. Now on the downside, we could go as low as 78.84 and still be within pattern, right? In fact, call it 78.78 just because. So again, you're looking at the chart later and you see it's like 78.50. Well, guess what? We're below pattern. Now, less significant because we've been below pattern before. Look at this guy. All the way down here, right? All the way down to $6,600. So, you know, much less of a big deal on the downside because we've recovered. We've had all that buying come in. If you are going to go on the downside here, I would imagine you're gonna retest this level here around 73.61, and then, you know, it's party or no party. So we'll have to play that by ear. So there's a lot happening just in this zone. And, you know, we go to shorter time frames to get a better idea on what the current move is. Currently, we have some selling going in, but you can see yesterday's candle, volume-wise, was really bad. This is garbage volume. Again, the previous 2 days, garbage volume, not good. Garbage volume. Over average volume over here on the big spike, right? And it's a 13% candle. It's a $1,000 candle. So it's a big deal. But all that being said, the overall for our current pattern is we're losing volume. We're losing interest, right? There's less traders buying and selling because they're less excited about this pattern. So some people are just kind of on hold saying, look, we break above, I'm buying long. We break below, I'm selling short. So it's we're at a waiting period right now. But we do have support on our lower EMAs, our faster EMAs. All right, so let's do this because, you know, before we get in any trouble, let's throw this out here. All right, so GByte. This one is for Snow because I don't know, it's her favorite coin. So we did put this bar over here. I was expecting this to come down a little bit further, right? As a kind of like a Hail Mary safety bet right here would have been a real nice pickup. Didn't make it that far. Ended up recovering halfway down range, which is just bizarre, you know, that it found support right here, you know, like a previous low, but still this area just wasn't that significant. I didn't think it was that significant, but it did find support nonetheless, and that's great, right? So found support, pushed back up, got itself out of range, so it really just tucked in here just for 1, 2, 3 days. Had a nice move up, right, all the way up to 47, and then pushed the next day all the way down back to 34. So monster move. Now this candle right here is just sick. This is a massive doji. So doji, typically, I call a doji if it's less than like 1% or 2%, depending on the overall strength of that asset, right? That asset is trading within sats, like satoshis of, you know, whatever, 10 to 100. You might have to cater that 1% a little bit. When you're dealing with something that has, you know, within the 10, 20, 30, 40, 50, $100 zone up into the thousands, you can squeeze that down a little bit more. Anyway, this had a total up move 0.08%. But look at this freaking candle. So just on the, look at this, just on the upside, this candle was up 23%. On the downside, this candle was down 10%. 23 up, 10 down, right? The 30% range that this candle was moving ended up closing within 0.08% of where it opened. That's pretty impressive. So, dojis are massive indecision, gamma tug of war, nobody wins, bulls, bears, you know, it's that whole thing. So that being said, and that's the kind of candle that was painted, you don't have much to go on except for you've failed at the top side, but you failed at the bottom side, and you're sort of right back to where you were. So you sort of reset back to your prior candle, and your prior candle is, you know, a massive bullish candle, you know, in front of another doji, right? Another indecision candle. So that being said, you would look for trend continuation. So you got a low, you got a higher low, you got a higher low. So expect this to be another higher low, unless, of course, something drastically changes. But what we can see is this right here. Let's get our little arrow out here. and do something like that. So volume down, price, right? Price at the same level, price at the same point, basically, down, right? So what does that tell us, right? So less interest, less interest, less interest, less interest. Essentially, you're looking for some type of reversal, right? Volume should come back up, price should come back up, something like that. All right. Now you do have some levels in here to contend with. You still have a massive swing fail all the way back over here. You know, and you know, we did originally do this, right? But it became sideways and almost irrelevant. So we just simply added this to it. Now I like this level a little bit more. Now I could do this, right? All right, but that wick is pretty intense. The actual fail came prior to that, right? 1, 2, 3, 3 days prior. So for me, I'd rather look at something like this. Now you could also do this, right? This is not, you know, against the rules here. And if you were to do the swing fail like this would give you a larger portion of the cautionary period. But it also shows you like, hey, wait a minute, this trend might even be relevant. You know what I mean? So you have to play around with these. It's you know, there's no hard line rules when it comes to trends. It's sort of, I don't want to say you just throw a bunch of stuff at the wall and see what fits, but you do have to play around with them a bit to at least find something that makes sense. Like this to me makes more sense because of these two candles. Prior to those two candles, up here made more sense because there's nothing, right? There's nothing to base it off of. Even coming down something like this or something like that, like, okay, well, that'll work too. And again, it's all within range, right? It's all like plus or minus a little bit. Consider this whole thing, you know, a zone, right? So if you're going to do that, you know, you could do something like this and something like, you know, that, or actually just come over here, do something like that, and then just do that. Say like, all right, you know, here's my median line, right? And then plus or minus, you know, that's this way you sort of incorporate everything. But anyway, I do like it better down here. So I'm just going to continue with that right there. That's fine. That shows, I like that. That shows an attempt, 2 attempts, both rejections, right? All these wicks were just, you know, instant sells. So no big deal, right? So bang, bang. We still need to push above over here. We get into our cautionary period. Cautionary period then brings us up to our prior failed high, our swing high, right? So that's the idea with that. All right, so that'll take care of that. And we're good. BNB USD as well, please. Ah, you even said please. That's so nice. BNB, sure. Let's take a look. So BNB, still our next level is 37. Nothing has really changed as far as that's concerned. You know, this is a repeatable, you know, move right here, right? If it's as calculated as it can be, BNB is doing it for us, right? You got your low, you got your high, you got a pullback, right? So this is now your new low, your new high, your pullback. Okay, you got your new low, your new high, expect a pullback. I mean, that's, now you can start playing around. Now you got some data, right? So right here, where did you pull back to? Okay, close to previous structure high. Not quite. It more like the blue line would have been a little bit better, but didn't quite get there. Then you push back up again. What was your low this time? So here's your high, here's your low. Kind of. I guess your highest candle on the ramp up. You know, that was a bit of a retest. So another push up and another drop. So where would you expect this drop? Well, I mean, I would think right here, right? 32.41 seems to make a lot of sense. So let's just say we did something like that, right? And then we'll find out. You know, time will tell. Is this going to come down? Let's say 32.41, and then what's the next mark, right? 37. So if this does do this, and then it does this, right? And if that's the plan, then you could trade it, you know? You sell your BNB now and you buy it here. You throw a stop loss, let's say, underneath this candle, so somewhere around 29.50. That'll gauge how much you can actually put into the trade based off your total capital. And then you're looking to take profits around 37.94 ballpark. BNB is very interesting because it's been holding very well despite, you know, the market changing, Bitcoin doing its thing. You know, there's just a lot of things happening that are out of everybody's control. And BNB is just kind of like, I don't care, dude. I'm just doing my own thing. And it's like, you have to kind of respect that. Right? You have to be willing to trade that as well if you want to make money in the market. So, you know, you put your faith into what you can, right? But as long as the trade makes sense, you got a proper stop loss, you got an exit strategy, you got selling strategies, then yeah, why not? Now, you can also do this, too. I'll show you another little tidbit here. Just measure each one, just on the local side, right? So here we are, up, 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 down, right? So it's fine, no problem. Up, and then down, right? And then you want to know, where did we get to? So I'm just going to put it over here so I can read it a little bit better, right? So here's our up, there's our down. Where did our down come to? The 5, all right? Cool. Now we do it again, right? So now, right here, I'm going to put it up top, right on that wick. And I'm going to look at this, but not until I move this guy down here. So now this is our new low. We came up, we posted a new high, right? And we pushed down for a pullback. So where are we at now? Now we're no man's land, right? We're in between the 236 and the 382. With sort of a retest to previous structures. So that's an idea too. So we'll call it, I don't want to call it the 382. I really want to call it the 236 either. It's kind of right in the middle. It's a bit of a no man's land. But we'll keep that in the back of our head. And we know the other one was the 5, right? So now we're going to do it again one more time. And we're going to take it off this top. And then we're going to start our new low, which is here, right here. And then we're going to see what we're looking at, right? So if we were to come down to the 5, would that make sense? Well, the 5 is very, very close to this little arrow candle that we just added there. And in fact, that's the body. You know, you could do the body or the wick. You should really cover the zone, right? So for all intents and purposes, we should do this, which would cover the wick and the body. And this would be a target buy zone, so to speak. Boom, boom. All right. So look at that. That's the 5. Now 2, 3 would only bring it down here just a tiny little bit, which it looks like, did we already attempt? I think I just, no, not just yet, right? So that's okay. Now, does it make sense for our trend? All right, now we have a little trend here, don't we? We sure do. So not really. We'd actually have to cross the trend like we did right here in order to make this possible. Otherwise, we sat on trend right here. Okay, now of course it's not a perfect trend line, but it's something to look at. It's just something to pay attention to as you make these trades and if you're putting these buy orders in. So if that's the case, then maybe you front run it a little bit. Maybe you come, let's see, you measure the candle down, you say, all right, well, 32.27, I feel better about that. It rests on the trend. It's close enough, right, to consider that basically kind of like a little push and a retest, and then onward and upward to the next move. Now, you could also get, this candle could be a bullish candle. We're 23 hours away from closing it. So it could very simply just be like this, you know, large candle, spinning top, large candle, right? You still had a pullback. It just wasn't a multi-day pullback. It wasn't a 2-day pullback. Over here was another, basically a 2-day pullback based off of the lower wick. All right, over here you have your first day so far. This could very easily be 4 bullish candles in a row, in which case we hit 37 possibly in the next 23 hours. All right, so there we go. BNB has their snapshot competition ending in 2 days. All right, Brandon, thank you. I always appreciate when FA makes its way into the chat, which is very good. So, yeah, so you could take that and take a look at the chart and make yourself an educated guess on, where did the competition start? Let's say the competition started right here. Let's just say, right? And let's say all of this is due to competition. It's possible, for sure. Anything's possible. And if that's the case, then like everything else in crypto, right, you buy the rumor, sell the news. So when the competition ends, you would want to be short or exit your trades, reevaluate what the chart is telling you, and take it from there. So they could have extra momentum based off of competition, off of FA, which is great. So will it hit that mark or will it get denied at that mark? We don't know. We don't know. This right here, just looking at it, right, you can see now previous highs, right, just on the daily. You can see how the body closed, right about at the wick line, but pushing all the way down was basically this consolidation period. 1, 2, 3, 4, 5 candles of very little body movement, and then one long bear day. Long dark day, long black day, whatever they call it. All right. So there's your BNB. BNB. Yeah, I know the chart's a disaster, but it's proven to be somewhat accurate. I'll deal with a disaster chart if we can make money off of it. Got no problem with that. All right, so let's scope out some things, right? Yeah, let's scope out some things. Let's see what's shaking. We are on Saturday, so why don't we put on D7? Let's get a 7-day look on what's shaking. See what we see. 7 days. Now, is this coffee drinkable or is it just... Oh, it feels so hot. Holy moly. Holy moly. You see that PHP? 788%. What the hell? All right. So we're looking at the 7-day view. Peak gain is up. PHP BTC. I mean, there's just clearly it's new. It's a new Binance thing, recently listed. Not enough data to actually look at anything, but peak gain is showing 788% up in the last 7 days, and it's pulled back 83% of that so far. TNB. 1, 2, 3, 4, 5 out of 8 are in a strong downtrend. 554% up, 13.11. That does not seem... Let's take a look at that. TNB BTC. I just want to see what's going on here. TNB BTC. I feel like we're either going to see a massive wick or something's just wrong. It's a decent sized wick, but... I mean, yeah, it happened in the last 7 days. So 1, 2, 3, 4, 5. 1, 3. Yeah, 7. All right, but is that... Can't be 500%. Oh, shit. It is. Wow. Yeah, 575%. All right, well, there you have it. Okay. These things happen when you got fat fingers. So more than likely it's a fat finger buy order. Somebody probably messed that one up pretty good, but we'll double check. We will double check. Let's see what we got here. Yeah. So again, I think we just did this the other day, but you pull up on the 5-minute chart and you don't have like legitimate, you don't have like legitimate trading. Then it's probably just a fat finger. Now, you could do it on the 1 or the 3, which is fine too. I like to do the 5 Only because you put on the 1 minute chart, you'll be scrolling for like 6 days before you find that box, and I don't really want to waste that much time looking at what would probably be a fat finger. So call it a fat finger. So again, you can't even, you can't go by that. You can't justify the 588% because in reality, this went down 10%. Okay, so back to the drawing board here. Here we go. All right, let's see. 169, TNT, AST. Matic was doing some things. T-Fuel just got listed. That did some stuff. Doc, APPC, WPR, more APPC, FET. All right, so you could do a few things here. Let's scroll by daily trend. Let's see what is trending on the daily side. Strong uptrend on the daily. And we get a view on what's shaking on the peak gain side. So a couple different ways you can use this. So one that's in trend from the long term, hour to the daily, and slightly moving on the short term, Litecoin. So Litecoin USDT looking like it's trending fairly well. ETH USDT trending fairly well. So far, bit of a pullback in the 5 minute. So up 11, down 23 of that 11. That down could be a factor right here. So let's take a look at that. ETH USDT. All right, so what do we got? All right, so we finally broke out of. So this is what I mean about the pattern just doing nothing, right? You never broke out to the high side and pushed out. You never broke out to the downside and pushed out. You just continued trading nothing, right? So I forget who we were. I think we were explaining this to someone the other night. Anyway, let's get rid of all this. Let's just go ahead and dump it down. So when you have that, it's just an invalid pattern. That's all it is. It's just this pattern just didn't do anything, right? They're not all gonna be perfect. It would have been a great, bull flag if it broke out. It didn't. Would have been a great symmetrical triangle if it broke out, which it didn't. It could have been a lot of things. It ended up being nothing. So that's all. Continuing trend. That's it. So then what do you have, right? All you have is a swing fail. We could put that back because it doesn't really matter. What I want to do is take that. So you have a swing fail. This, basically, right, that. All right, so, by default, you're trading on the other side of the swing fail, not because price action actually did anything. It just, basically ran out of room on the chart. So again, less significant, but nonetheless, this is what was once resistance, right, is now currently support, if it finds support. If not, it'll just look like a wick, and it'll come down, and again, it'll just be more resistance. So this is our new line of focus until something happens. So if that's the case, we just do this, and we do this, and we say, okay, well, here's our cautionary period. We're in it right now. This is a flipped until we hear otherwise. So we can go onto the hourly chart and see how it looks. And you look for that retest, right? And we got it, so this is good. Pushed up, it failed. Pushed up again, close, failed. Pushed up a third time, close, fail, fail, fail. Pushed up again, closed above, drop, big drop, support. This is the first time you found support. Pushed up again, drop again, support, 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 support. Now you're pushing off, okay? So when you zoom in on the hourly, you get a better idea on what actually forms those candles. Then you got a little bit more confidence in this trade, let's just say. So now, if you have a support line, basically you have a stop loss, right? You have an indication of where you want to get out of the trade if it goes the wrong way. So that being said, and you were long on ETH, you could take a trade that would look similar to this. And then you'd have a stop similar to this. Let's say down on this candle. All right. So price comes down below that previous low. All right. Outside of your trend. So flip it from support back to resistance and then get yourself out of the trade. All right, some people do this. Come all the way down here. But then you have to judge your capital. Can you withstand this? All right. This loss. If you do get stopped out here, did it just wipe your account? You just have to be cognizant about how much you're actually risking. All right, that's a 7% drop. Right, and the reward would be an 11% reward. So not good as far as risk reward. So you would want to do let's just say you did this. So you allow a little bit of breathing room, which is good, right? You want breathing room. So you come up for 11.5 and you're risking 3%. All right. So not like you're going to go in with your full capital. So cut your capital into thirds and then you can risk. So now that 2% becomes like 6% allowable, right? Because that 2% on a third of your account would total, right? So you'd probably be like, bang, if you wanted to give it more breathing room, more breathing room to allow it to sort of dip a little bit, retest these levels, and then push back up. So anyway, so that's ETH. ETH failed our pattern. No good. No good. All right, what else we got? You guys seem very quiet tonight. Is everybody okay? Is everybody feeling all right? Is everybody feeling okay? ETH. So EOS. EOS again looking very much like Litecoin, right? So let's take a look at. Looks like Pundi just went up like 30%. NPXS. Where's that at? Just got like an alert. It could be anywhere. Jeez. All right. Well, don't worry about it. Let's take a look at EOS. So EOS has FA news coming up. So EOS is something to look at anyway. All right. EOS. EOS. So EOS was working a trend, and it still is, which is fine. Okay. Found its bottom, or at least its local bottom, all the way back here, just right about the end of the year, hitting in December. Came up, made a real ugly move, a 1, 2, 3 to the downside, but found support, came back up, failed to make a higher high until breakout candle, right? Breakout candle came in, pushed all the way up, came back down. Where did it test? Exactly, previous structure high. Came back, another disgustingly ugly move, sideways, painted itself a little bit of a symmetrical triangle, and then push, failed to make a higher high, lost a little bit again for a few days, again, breakout candle. This time it didn't come right back down and retest previous structure highs. It took its time. And what did it do? It tested previous structure highs. Right. So pretty classic move over here, right? Then it goes up. What happens? Again, fails to make a higher high again. What does it do? It makes it on a 2-day breakout play instead of a 1-day breakout play. Made a new high. So what has happened the last few times? What does structure tell you? It's going to come back and retest this right before it goes up to make its next move up. And what did it do? Right here, it happened a hell of a lot faster than any other time. It came back, failed to make a higher high, pushed back sideways, pushed down, and here you go. Retest structure high. Structure high retested, gives the green light to make the next higher high. All right, so all that being said, I know that was a little long-winded, but it's okay. So if you just went on your highs, which we can, right here, oh, well, what we did right there, get over there. There you go. Nope. Oh, jeez. That's the one. Okay. So if we just went off of our highs with our high and our high and our high, right, we just missed this high right here, but that's okay. It's an indication for the next high, right? Next high. So if we go by this pullback, which is what we measured some of these other moves, right? The 1-6 pushed over, got the 1-6, no problem. The 2-6 ended up being our top out area right here. 3-6 would be our next target zone, and 4-2. Sometimes you can skip that 3-6, just go for the 4-2. 4-2 is also our 5 on the global. Look at that. You see this? So look for confluence in trades, right? So from here, this is our global high, right? This is our high. So our high to our low, and we're measuring the pullback. We're measuring the retrace, right? So when we've hit this level here, we've retraced 23% from the all-time high. When we reach this level here, which we kind of just did, basically to the set, 38%. 38% from the all-time high, right? How cool is that? 38%. Our next level is the 5. Even though the 5 is not a legitimate Fibonacci level, psychology-wise and trading-wise, people use it. So we use it. Why? Because you can make money from it. That's why. So the 5 is the next target level. The 5 also has confluence with our 4-2-3 off of this major pullback during our uptrend. So here's our uptrend. Here's our major pullback. Major pullback that got us a 1-6 and a 2-6 top out. So confluence in this being legitimate, or at least a target area, gives us a 4-2 that we're already looking at. 4-2 ends up being the 5, which is the next step after the 2-3. So 2-3, 3-8, 5. Bang, bang, bang. Now, what else can we do? Well, we could say, all right, so we got the 4-2, we got the 5, right? We got our trend, and now we have trend lines, right? So trend line gives us what? An indication that if we were to hit the 4-2, which is our 5, and we stay within our trend, what does that mean? That means we have a date, don't we? Yeah, June 16th is when we're looking to get into that 4-2-3-5 zone of $8.60, $8.70. However, I know. Something can be said for this, right? We have a long-term trend on a massive fail. Not just any fail, it's the fail that gave us the bottom. All right, so right now, currently on this chart, this is the bottom, $1.52. That's the bottom. What caused that was a fail of this trend line. This trend line becomes important, and just like I said when we first started, we were talking about Bitcoin, and said, some of these trends, they come into play, way later down the road. So we broke it November 13th, 2018. We found resistance on it May 15th, 2019. All right? Not just coincidence. Okay. So anyway, so this trend line became resistance. So this is a flip right here. It's a long flip, but it's a flip nonetheless. Support, 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 fail, resistance. So something to keep in the back of your head when you're looking at stuff like this. Right? It may seem like, oh, yeah, I'll just line up the 5 with this and then we're good. Nah, it's just not the way it works. All right? So you had confluence here between this channel trend, this long-term trend, and this horizontal 382 on the global fib, along with a 2618 based off of profit targets, right? So all of that just made this zone, and again, a zone, right? Bang, just do that, right? Give yourself a little bit of room here. You're trying to call a shot 6 months later, whatever, all the way back from December. Give yourself a little bit of playroom here. You don't have to go dollar for dollar, cent for cent. You just want to be in the ballpark of where to look at. So that's why I would do this over here. All right. Allow plenty of room, because this EOS FA that just came up, not just came up, but I believe they're doing that in the next few days, maybe like a week or so. They got something scheduled, and I don't know. They're going to announce something. Who knows? It could be nothing. It could be something, right? Regardless, in crypto, people buy the rumor, right, and they sell the news. So if we have this could be one candle. Bang, one candle. But, it could take a little while too. And then you got to forgive this trend as well. Look at this. You breached it, came down, and then here was your actual, resistance line, right? That was April 9th, started on the 2nd. So within a 7-day period, yeah, we hit it. It was resistance. Yeah, I got you. But this is the real one. So it could be the same deal. We could come up in the next 2-3 days. We smack it. We come right back down. We go a little bit more, push up again, and then that's our real resistance, and then we drop. Right? So this is just something to look at. But I am targeting 8.6. Probably a front run at 8.4. Ballpark. But certainly a chart to look at. All right, so what do we got here? BCH, ABC, USD. No, and your BCH. Aye. BCH, ABC, USDT. Bang. All right, so what do we got here? Not much. So I mean, we're still within our pattern. No different than Bitcoin or Ethereum, really, except that this is still very much within pattern, right? We have plenty of time to do something. So about the 50 mark on here, just visually by eye, I don't know. I'd say this candle is probably about 50-50, I mean, give or take, whatever. So now to about here. So you got like 1, 2, 3, 4, 5. We'll call it 5. Now 5 days to make a move, either up or down. All right, and that's the plan. So if you looked at the way we looked at the other one, you have a down move, you have an up move, you have a down move, right? You would expect the next move to be an up move if you maintain pattern. So if you want a highly risky trade, you could take this to the upside. Front run it probably a little bit, but you could long that if you want. Let's see, that nets you somewhere around 7%. And then on the downside, let's say your previous wick, so about 1.5%. So really not bad. It means you're basically hedging that. You're only gonna long this, unlike every other candle in here. Now this one's got a very short lower shadow, but all these other ones, they knock you out of every trade, right? So you might just have to go all the way down here in order to say, okay, well, that's going to be my stop. But, at the same token, this, all right, is just another symmetrical triangle inside a symmetrical triangle, right? So even though it's difficult to see right now, check this out. Do that, and then go on to the 1 hour. And guess what? All right, you have a pretty decent pattern that you could probably play off. So just give you further confirmation of whether you want to go long or short. Let's say you did something like that. Let's say this came down to something more like this-ish. Kind of like that. All right. So this will give you something to play around with, right? Now you got your bottom, you got your top, but you got a top, a top, a top, ride the top, then is your bottom, another top. So again, you're like out of room on this pattern for it to do anything, but at least this could be an indicator. All right, if we push up past this with like a little baby retest, all right, well then I feel better about going long. Right, if we drop down to the bottom side and we get a little retest, then I'm okay going short. This is just another way to help you get entries based off of larger time frames. So you have the larger time frame, you're like, well, I don't know what I want to do. I want to trade, but there's not much going on here. All right, well, go ahead and throw it up in a 1 hour and dissect it a little bit. See what you see. And if you see something that says, hey, this is a trade I would take if these were daily candles, well, then there's no reason why you can't take it on the hourly. Just remember that everything has less weight on the smaller time frames. It's just how it works. So, you know, a symmetrical triangle on a 1 minute chart just doesn't have the same impact as a symmetrical triangle on a monthly chart. Right? It's just a little bit different. All right. Let's see. Oh, all right. BCH has made me heaps of profits. Well, I'm glad it has. Yeah, I want everyone to make money, right? That is, you know, I'm here to sort of facilitate and help in any way that I can. But yeah, I mean that is the goal. You know, I want everyone to be a successful trader and be an educated trader. So that's good. If you make money on this, then make money on it. If I were looking at this just to pull trades in its current state on the daily, I don't have a trade. All right, that's just me. So if I was just looking at this, and I was saying like, all right, well, you know, I need to make a trade, right? Well, and I would probably just throw a trend up here. Say, all right, well, here's our bottom. Here's this. Okay, we're above trend. I got target levels up top. We're still in trend. Right, I got a low, I got a high, I got a higher low, I got a higher high. All right, I'll just long it. Right, but if I wanted a trade on here that I wanted to scalp or do short term, then I'm probably headed down to the 1 hour. I'll take a look at these patterns, and then I would ride this out. And I would say, all right, well, I can make money on this. Right? That's not the problem. I just have to go the right way, right? So if I go the right way, what does that mean? So it means if I break out of this triangle and I get like a little retest, right? And flip this, and then I just play it as a trend line resistance support flip. Same thing down here. If I come down here and I push down below, at that point I'm probably not even waiting for a retest because this is not a confirmed line. 1, 2, right? That's it. You only need 2 points to make a line. You need a third for confirmation. This has 1, 2, 3. So at least this trend is confirmed. Okay, this one is not. This is not confirmed. This is just 2 lines. That's all. It's just this. Bang, bang, right? It's just 1, 2. It's just 2 lines. It means nothing. It's an idea that something may happen, right? But it hasn't been confirmed yet, where this one has confirmation. Right here, and right here. So we know that this level makes some sense. As far as other people are concerned for trading, we know that this line is worth something. So if the line's worth something, what does that mean? Well, it means that you can use it to your advantage. Traders have found resistance consistently. So the second you flip it, well, now all of a sudden, that means something. All right, if you don't have it on the downside, then what does it mean? It doesn't mean anything. Not yet. It could mean something later, but it doesn't mean anything right now. Right? Look at it like this. Now you're going down a channel. So you got the bottom, the top, the bottom, not quite, the bottom again, not quite, the bottom again, the top, the bottom again, the top. So this is just another way to take a look at the same situation and say, okay, well, this is something worth looking at. On the hourly chart, we could see this is not a very good example, right? But this is a much what do you call it? So this would be like a V bottom, right? So you have your top, which is a swing fail, sharp drop with a sharp rejection. So kind of like a V bottom, right? And then another long, slow drop. So this could also be considered, if you were to look at it like this, what is that? We just talked about it last night. What's this? Anyone? 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 Bull flag. All right, so you got a mini bull flag right on a 1 hour chart inside of a symmetrical triangle, which is what? A pennant. Right here. Okay? So, 1,000 different ways to cut a slice of bread, or whatever the saying is, it doesn't make any difference. There's so many different ways to look at the chart. You just have to have a reason for taking the trade. Right? You just don't want to FOMO blind take a trade because someone says take the trade. You want to have some type of reason for it. And if you did, then you would have proper stop losses and proper targets. Why? Well, because of this. Now you have a target. It's just that easy. Right? If you're gonna trade this as a bull flag, then a bull flag has a measured move. And the measured move is the length of the flag post breakout. So it's a 1-to-1, right? Minus the dip. So whatever you dipped over here, it's fine. You're going to break out on the top side. So you break out on the top side, and where does that leave you? Perfect. What is this? Confluence. What's confluence? Confluence is when two things coincide in the same arbitrary area, right? So this is our original swing fail. Swing fail right here. What does that mean? That means that we're a cautionary period, but this trade blasts us edge to edge, right? Like cloud trading. Right through the cautionary period, and where does it land us? Above our previous high, which means what? Which means we go long. So there's just so many different ways to play this. Now let's say you took this swing fail right here, and you were like, all right, well, I didn't mean to do that. You say, well, I'm going to adjust my fail, and I'm going to do this. All right, just like we adjusted the other one. We're like, let's just adjust it, right? Because now we have more data. It makes a little bit more sense, blah, 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 blah. Right, so here we go. We adjusted it. Now, how's that look on the hourly chart? Hey, man, that is freaking wild. Check that out. Bang, right here. Where did it find support on our newly created flag? Why did it find support right here and nowhere else? Well, I don't know. Maybe this trend line has some weight to it. So now we got 1, 2, a cluster of 3, 4, 5, right? 5 into 6. So what happened right here? This is a flip, right? This is a resistance to support flip right here with a retest. So bang, 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 push, rejection, rejection. This is a failed attempt, right? Rejection pushes down, comes back up for a retest, bang, smash through. Smash through, what's it do? Push. Bang, right here. This whole move shows you a flip. You came up, you found resistance, you pulled back down. You wound the coil back up, you let go. This time you made it through. What happens? You come back down and you solidify. This line is now your line. Now it's support. Pushed up, push up, push up, push up, bang. Where'd you fall down again? Support. So now you can put more weight into this trend, right? And now what do you have? Well, now you got a different pattern altogether, don't you? Right now you got a falling wedge. How do you have a falling wedge? Well, because the angle or the slope of these lines coming down here, right? This yellow line here, along with this new white trend line, now gives us the shape of a wedge instead of a channel. Right? So it would look more like, you know, that-ish. Ballpark. All right? So now you got a little bit more of a wedge and a little less of a channel. But regardless of what it is, it doesn't matter. It's how you want to dissect it and what you see, right? You're going to see something different than me. I'm going to see something different than you. We're all going to see the very obvious things. That's like the good part of it, right? We're all going to see, you know, we're all going to pull up the weekly chart. We're all going to take a look at it like this. We're all going to go like that. We're going to be like, okay, cup and handle. Or Adam and Eve. You know what I mean? Which I disagree with, but it's not a double bottom at Adam and Eve. It's just this. You know, or it's the old University of Miami thing. But anyway, no, it's a low, it's a high, it's a higher low, it's a higher high, a higher low, and a higher high. That's all it is. Right? We don't need to complicate it any further than just that. So if we understand just that, then if you're a trader who trades once a month, what are you looking at here? You're looking at trend, right? You're in an uptrend. You're in an uptrend until you're not. That's how that works, right? Or you're in a downtrend until you're not, until you're invalidated, right? So what would invalidate this trend? Well, let's take a look at it again. You got a low, you got a high, you got a higher low, okay? Then you got a high and a higher low, all right? And you got a high. So what happens now? Your next low has to be higher than this guy right here. So what does that mean? That is your level, 231. Now, 231, we're trading at 402. I know you're probably like, what? You know, what am I supposed to do with that? Well, it's just one way to trade, right? It's an indication that that level could be very relevant. Something like that. Now, why was it relevant on the way up? Well, because that's where we stopped. That was our rejection. So our rejection right here at a high of 229.38 caused our next higher low. This failure caused this candle. All right? So when we pushed all the way back up, and we smashed through, and we were like, yeah, we're winners, we're winners, we're winners. And you come down and make your next higher low, where was it? Previous structure. Came back and tested your previous structure. It's no different than the flip we just looked at. This is a flip. This is a support resistance flip. You were rejected, right? You swung all the way up, you came down, and now it's support. Just a flip. That's all it is. All right? Cool stuff. Cool stuff. Anyway, that's, what are we even looking at here? Oh, yeah, cash. BCH, little Bitcoin Cash. I don't know. I don't know if I confused you further, Snow, or helped you out, but I hope I helped. Never want to confuse anybody. All right, so what do we got here? You're out at the moment. Okay. Oh, and Decred. That's what we were going to look at. Yeah, I like Decred. I like Decred. I do. A couple of cool people, man. I met them at a conference, I guess 2 years ago? Jeez. Maybe a year ago. There is a tether pair. It's on Huobi. Nah, Decred's old, so let's go with BTC. We'll get a little bit more history. Not as much on Binance, but we'll see what we see. So Decred is a very interesting project. It really, truly is. I'm not going to go into a whole bunch of detail about it right now, but if you're ever interested, we will talk. That being said, it's not a very pretty chart. That's for damn sure. which is fine with me because, you know, I'm looking to pick it up at a discount. You know what I mean? All right, so Decred. Big drop. This is ugly. Jeez, really ugly. We need more history. Yeah, we need more history. All right, so let's see. Decred, BTC. We're gonna have to go with like either Trex or Polo. Oh, Trex. Let's see. This is clearly listing February 2016. February 2016. May 2016. So we'll have to go with Trex. Yeah. I doubt. Well, I mean, we'll take a look. But yeah, no way. That's June. Okay. Yeah, that's a quality chart right here, guys. This is looking really good. That's wild. Did it hit BTC just list Decred? What? It's crazy. All right, anyway, let's stop wasting time here. Let's go to Trex. All right, so here we go. Now at least we got some history, right? Because that level down there, you know, how is that supposed to make any sense when you don't have this information right here? And this information is what gives us our horizontal support resistance, which is what we need. So, you know, would we do this anyway on any chart? Absolutely. Are we doing it right now just because it's trading right here? No, but, you know, we know the drill by now, right? This is horizontal support resistance, right here. Bang, bang, double bottom. All right, we're cool. We don't need to put one down here, not just yet. We could, I guess we could put one down here. But, yeah, let's do that. Just in case this thing dumps, at least we got a level to look at. All right, so overall, we did lose, right? We tried to build a trend here, right? We got a low, you got a high, a higher low, swing fail, all right? So now we do our swing fail, blah, 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 blah. We do something like that and something like that. Looks pretty good. What do we also have? We have a descending triangle, right? So big pattern, bigger pattern, flat bottom, sloping down, descending triangle. All right, so we do also have a fib we can throw on from our bottom to our top, which is this right here, 217952, 217952, that, 217592, 17592. That's just gonna have to be close enough. So we can watch, right, the carnage basically. You can watch the drop. Okay, so if we have R1 down on the bottom, is that not correct? There we go. All right, in our top, we could see on the way down, right? This is the drop now, right? So our drop, we found support 618, pushed all the way back, swing fail, failed to make a higher high, pushed down 786, 786, pushed up to the 5, 5 failed, pushed down again. So what do you see here? Level, 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 right? Horizontal support resistance, but look where it touched down, 886. So this is a three-step, 618, 78, 886. 1, 2, 3. Bang, bang, bang. Found a bottom. Pushed all the way back up to where? Right where you started, 618, 618. Failed again at the 618, dropped back down. Found support midline. I don't like this. This is ugly. It's between the 786 and the 709. The 709 is not a fib, but we use it anyway. Pushed back up this time. First time breaching now, 618. Working its way back to the 5. Tested 382 all the way up to the 236. Fantastic move. Short-lived. Dropped all the way back down. We're going to have to call that 786 zone, even though it didn't quite touch. Tested again, 618. 618 lost. Came back down. So another rejection to where? Right here. Double bottom. But what can we say is likely to happen? Anyone? Anyone? No. Okay. What I would say is likely to happen is a repeat of the past. One wick is all it takes. One wick, 283, 34.95. What do you think? The low was 280.100. So, this is when TA meets, I don't know. I'm lost for words. So, right now you're finding support, right, on horizontal historical support resistance, which would give you a nice double bottom. Double bottom, generally speaking, would give you a push to the upside. From the 886, we would be looking for our target of 618. However, we haven't quite hit the 886 now, have we? No, we haven't. We're just in no man's land right here on this historical level. So, that being said, that gives me reason to believe that we should at least get into this zone. Something close to the 886. Then from the 886, depending on whether we have any type of support over here, if we have the same buying that's left over, right? All these buys probably came real quick, right? We haven't been down to that level ever since. So there's probably a lot of orders still on the table here. And this would be my next move. Bang. Now, what would be even better is if we pushed up, right? Flipped our swing fail, came back to test it on the support side, and then we made the push. Right? 382, 236, 1-to-1, bang, swing fail over. All right, but because this is sort of dragging its heels, kind of like slow moving, slow moving, slow moving, slow moving, I'm not so sure it's going to go all that quickly up. But let's just say we had some type of arc like this. I'll say there. Something like a 618 retest, push, push, right? Push on 7, push on 6, and swing it down here. Now, there's a few things to look at here that are in our favor if this is to play out, right? This guy right here for sure. Okay. Volume overall, right? Even though you had some divergence over here, volume down, right? Down, 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 down. All right, volume. Let's just take it from this top. So from the top right here. Okay, it doesn't work out as good because we got these guys right here messing us all up. So you don't have what we'd like to see, which would just be a straight decline. So keep that in the back of your head, right? That could work out against you. You actually have that. Okay? So your volume actually increased. Volume increasing while price is decreasing. So what is that? That's divergence. So you had divergence over here, which probably led into that spike right there, and then just a dump ever since. So now you're looking at under average volume. Blue line is the average volume. So under average. All right. Now, if we fail, this is why this trade would be pretty good. One, it'd be almost like a Hail Mary grab. If you were to get that, let's say you nailed that 8.6. And let's just say it came right back just to that line, you know. That's an instant 17%. All right? That's an instant 17%. It's fantastic. Now, on the downside, though, the next area of support is light years away. You're talking 16% drop. That's rough. That's a rough drop. So you'd have to be, you know, extremely careful. Remember how I said Pundi was up 13% like an hour ago? Well, it's down 12.5% now. So anyway, this would be a rugged play right here. So if you are going to do that, you know, I would say don't risk too much capital. Give yourself, you know, a little bit and get yourself out of the trade if you need to. If you want to stack, that's even more dangerous. But if you were going to stack an order here, stack another order here. And then your next level, man, your next level is like way the hell down here. At that point, you're just getting it for like free, though. Basically, just be like down here. And I'm going by this level right here, this area where we found support. All right. So, all in all, you got some things to work with here. I like it personally. I think it's pretty sweet. I want to look at something while we're over here, if that 4-2 makes any sense. And yeah, I mean, for the most part, not so much over here. It was your failure. It was your failure point up here, but then it blasted through. So not overly crazy. Not overly crazy. Could do the whole mammer jammer. Should be like that. This would just give us an indication. I wouldn't leave this on here, but I'd like to see if there's any confluence just in what's shaking, right? The 5 lines up with the 1-6-1-8. That's pretty interesting. Yeah, it's pretty interesting. Could be an interesting level when we come back to it. But like the 2-6 with the 2-3, that's kind of whatever, and the 3-6 and the 4-2 are just kind of doing their own thing. So sometimes I just like to see what's shaking, But yeah, so for Decred could be really cool. This could be a banger of a trade right here. Now I would do this front run that 6-1-8. All right, so something like this. Overall, this would be a fantastic trade. Even if you don't hit this, let's just say you found support on the double bottom, and you work your way back to the 6-1-8. It's 156%. I mean, is anybody upset with 156%? No, you shouldn't be. If you are, stop trading. You're in the wrong business. You need instant satisfaction, and you're just in the wrong market. All right. Now, of course, what's the fear? What's the fear? You don't hold. You come down to the next level. You don't hold. You come down to the next level. You don't hold. Right. And then what? Next thing you know, you're making lower lows. Right. Remember the trend. Local trend, right? You had a high, you had a low, you had a lower high, double bottom. All right, so we're not in a downtrend on the local side yet. We're not in the downtrend yet until you break this level. Right now, you're basically double bottom to the wick, not including this one wick right here. Right, you're basically a double bottom on historical support. And what's the larger trend? The global trend. Right, you got a low, you got a high, you got a higher low, you got a swing fail. We're right in the middle of a swing fail trying to get a higher high. So if we were to do something like this for just an indication of what we would want to be looking for, you'd be looking at this. 1, 2, so something like that. Of course, it would be all the way over here, so it would be super ugly. But it'd be like something like that. You know what I mean? Somewhere in that zone. So, of course, obviously, with all this going on here, none of that worked out well. Now, we could actually take a look at something like this, because if we do have a pattern, what do we got? See, that's an 888. It's too much. It's too much. But on the failure to the upside was 7-2. It's okay. Almost a 6-1-8 right here, but so let's say we played that 6-1. Right, and let's say we dropped it down. So an 886 puts us on an 8. Oh my goodness, an 886 puts us on an 886. That's incredible. All right. And I mean, you know, you could wick that out or not, but let's just say. So if we were to do this, right? So it's not a Gartley, because a Gartley would be, this would have to be a 618, right? This would be like the pullback was, you know, not what it is. All right. So let's just say, well, we still got the wick, right? So we're still, I want to play the wick. Wick. All right. So now you got your X, you got your A. So big impulse move up. You got your price reversal down and paints an 888. You're back up the top side, swing fail on a 618. 618 pushes back down. Your D target would be 886. Typically would be a 786. But in this scenario, right, you can't do that. You already lost the 786 a long time ago. 786 was over here. Yeah. So now it would make more sense to make the 886 your target, and then you would be going to the upside, let's say from A to D. Where would D be? D is on the 886. So let's put this all the way over here so we can see. So first target would be 2-3 and then 3-8. All right, so your 3-8 and your 2-3, right in between it is our 6-1-8. So although that's not perfect confluence, that's still pretty remarkable, in my opinion. Anyway, all right. So let's see. Yeah, it's like almost 10. I have some other things I need to do, so that's gonna wrap it up for tonight. But that was fun. We started a little later, but we went a little later. So how's that? Where would I put my stop on for Decred? Snow, is that what you're asking for Decred? Let me know if you're asking about Decred, and it depends on what trade you're taking, right? If you're taking the harmonic, you know, it's under X. Probably don't want to do that. Probably don't want to do that. Yes, for Decred. So if you were going to long this, so never mind the harmonic. If you were going to use the harmonic, literally your stop is below X. So yeah, don't worry about that. If you're just going to long this just to long it, so put it this way. If you were going to buy the 886 either on a double bottom or just on potential wick down, you would need to set yourself up with a stop just below that wick. So in other words, if you get in and you buy in, you're good, right? You need to be out of here before this next support level, unless you're going to ride the wave down. But that's a 17% move on the downside. Like that, it's too much. So, all right, let's say this. Let's say price comes down and you bought it, right? You bought the 886. All right, sweet. But price did not reverse. It didn't go up. It just continued to go down, right? If you were going to hold it all the way down to the next level of support, you're down 17%. So you don't want to do that. Because this is an open area and there's really not much happening right here, the idea would be if you bought the 886, right, and you're going to buy again down here and see if this holds as a support level, get out of the trade and do it over. There's no point in holding it that whole time. That's crazy. Just get the hell out of it. So my idea would be buy the 886. If the price goes any more than, say 3%, right? Let's just say 3%. It also depends on how much capital you're putting into it. Let's just say 3%. It's fine. All right? So you grab the wick. It's awesome, but price did not reverse. Get out of the trade. Why? Because if you want to buy this down here, you don't need to hold on and lose another 15 or 14% of your capital in the process. Why? Because then you could buy it down here, price reverses, this is all victory money, 16% up. Instead of getting hammered just watching it fall, and then you get a 16% bump, right? You look at your portfolio and you're at break even. Well, that sucks. You just went up 16%. You'd like to see 16% gains, right? You don't want to be break even because you don't want to be upside down 16%. That's terrible, right? So I would just get out of the trade. It's already a high risk trade, right? You don't have to make it like even riskier. You put buy orders in the 886, front run it, whatever. 886 is 28. You can front run it all the way up to 30, right? Right now we're at 33. So if any little price comes down here, right, and you'll know right away, because if you don't get this type of reaction, then those buy orders are gone. You want to see a wick. Now, of course, this is on a daily chart, so, you'd have to do, let's say, something like this and that. And let's make this like yellow or whatever, and then we'll go to like a 1 hour, and then we'll try to find that somewhere. And the idea would be like, how fast did they buy it up? That's the idea, right? Where's the money? Where's the candles? What's going on? What is this? What the hell is going on? It's a little weird. Okay. 4 hour? That's so wild. I don't know what the hell that's all about. All right. So how fast did they buy it up? This is what looks like a wick, right, on the daily. Or was that the weekly? Whatever it was. But look, you had a huge wick to the upside, rejection. But this got bought up quick. Dump, dump, dump. Buyback, sandwich, buy, rejection, dump, buy. All right, so this zone right here is what paints that crazy looking wick. Let's go back to that weekly over here. All right, so if that's the case, right, this is multiple days, right, but it's still pretty quick. So if you see this price come down, plummet style, right, and it doesn't get bought up real quick, it just looks like this. It's just pushing and pushing and pushing. Chances are you're going to want to get out of that trade. All right, let's see how it looks on the daily. I don't know why we were on the weekly that whole time. There we go. Yeah. But still, nonetheless, I mean, it'd be a fantastic trade. I like it. It's risky, but I like it. I'm probably going to play around with this a little bit more. Yeah. Cool. All right. Well, anyway, that will wrap it up for today. Again, it is a holiday weekend. It is in America, Memorial Day weekend. So tomorrow, which would be Sunday for Americans, and, whatever, Wednesday for snow. You'll have barbecues and all that good stuff. So, be careful, play it safe, and don't forget your charts, and make sure you got your stop losses in place, profit targets, yada, 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 yada. All right, so Bud should be back tomorrow night. Same great place, same great time. We'll cover the candle close. Tomorrow will be the weekly candle close, so that's always exciting. And I will catch you guys then. So until then, I want to see you guys on the exchanges, and happy trading.